So lately we've been seeing a lot about crypto. So I think it's a topic that we should address. Um, I kind of feel like the jury is kind of still out on crypto. I'm more of a traditional investor where I invest for the long haul. So building my wealth is why I invest. I don't do like a day trade because I kind of believe that with the day trading, you're hitting or missing, because if you had a crystal ball, you would be rich. You would be, to me, it's like Las Vegas or the casinos where you're hitting and missing one way or another. Although with our new administration, our market is very sensitive to everything that the president says, and he's always talking. So you might make a lot of money come January with day trading because that's how our market is going to work. But going back to the crypto subject, is that I feel like the jury's still out because I'm more of a traditional investor. I've looked at the market, and why am I more of a traditional investor? Is when I was younger, I started my investment in stocks, bonds, and equities, especially in during the dot-com era. And some of you might not know about the dot-com era, but it is the late 1990s, early 2000, where everybody was investing on momentum. Nobody was paying attention on what the companies were actually worth. And we just invest on what the stock market is feeling, the feelings of the stock market. Yes, it's important to think that or do that depending on what, but you have to know what you're doing, what kind of an investor you are. I literally lost my underwear, my little bit of dollars that I had in that time when I was in college. I lost my underwear because I didn't understand how to look at a company and the company's value and base that on my investment instead of looking at the momentum on what people are spending their money on the stock market. Because when the whole dot-com bust happened, all these stocks went to nothing. Like I had owned phone.com and I think I bought it for $102 and it went down to like 2 cents. So because phone.com was a dot-com company with no assets, not even, you didn't have real asset, you didn't have intangible asset, there was no asset. So it was just an investment on pure momentum on the stock market and how much we can do and how much we can play with, and that's what happened. So when you invest like that, you are about to lose your pants. Just like how if you were going to invest in the stock market and buy 10 houses and do interest only mortgages and then try to work with that, and then when interest rewrites or you can't afford to pay any of the mortgages and your house is foreclosed. So that's basically the same thing. So when it comes to crypto, my thoughts are there's not enough out there. There's not enough telling us what the crypto market is about. There's definitely not enough regulation. So the number one thing that you need to think about when you're listening to what I'm saying with this is FTX, the Sam Bankman-Fried situation with FTX. He was spending millions, billions, trillions of dollars, but and lots and lots of people invested in his markets, in the crypto market. But what happened? He was abusing the money, his accounting practices, nobody was paying attention to that. There was no regulation. And in the end all be all, he was borrowing from Peter to pay Paul. And it's sort of like a Ponzi scheme. And eventually what happens with a Ponzi scheme is when things go a little awry and Peter doesn't have enough to pay Paul, everything busts. And that's a very good example of why I am a little hesitant with the crypto market in terms of long-term investing, because I believe that we still need to understand the regulation. I'm a tax accountant. I do tax returns. There's not even any regulations from the IRS on how you should actually be taxing your earnings on crypto or how you should be even reporting your earnings on crypto. There's so many vague answers on how to do that. And eventually they're going to come up with something where it's going to affect all of us, and probably the small investors are going to get screwed, because that's usually how it happens. So my thing is, if you're going to start on the crypto market because it's like something we're hearing about all the time, is that you should probably start with the ETFs that are out there and try it out and see how it works if you're a long-term investor, and then see what happens. Don't get me wrong, I know a lot of people that have made a lot of money on the crypto market, but we don't know enough about the crypto market and what's happening within it to be able to study it and understand what the long-term effects are. And until we're able to understand that and make calculated risk decisions, then my thing is the jury's still out on crypto. If I was gonna start, I will start very tiny, and I think if I will start trying with the ETFs and see how it goes. But it's gonna be a very tiny part of my portfolio because I am a long-term investor, because I'm about building wealth. So building wealth is not something that happens in a second. Building wealth is something that you take the building blocks and you build one on top of each other with. And when it comes to crypto, it's too risky at this point with no backing. Because even if there's a stock that goes down, let's say Google goes down or Apple goes down, there's enough on Apple's asset balance sheet that eventually, if you're a long-term investor, it will go back up. So that's what I mean by risky, because if you're investing in a company, the stock might fluctuate, but the company is still strong. So you don't have to worry if the stock is fluctuating. So that's my story on crypto. I'll probably do a lot of videos on crypto depending on what my journey is. When I do my first investment, I'll let you guys know.